welcome. Yes, we are back, ladies and gentlemen, for that Monday flavor. Boy, oh boy, oh boy. It's been an interesting weekend, to say the least. What are we talking about today? Well, there's good news and there's bad news about Bitcoin. Now, this is what I usually find. When Bitcoin's taking a little bit of a shoe bag to the downside, people are like dreading looking at their portfolios like, ugh, what's the story? But then you've got the stock market all-time highs and NASDAQ and S&P just loving life. And, of course, the sell button doesn't work on the S&P and the NASDAQ. So if that's the case, then why even bother doing anything? Just hope that anything that you buy is just going to keep on going up. Now, we got some important things to be discussing today as we start the new week, trading, investing, whatever you want to call it, guys. There are a few things that are coming into play this week, and we've already had some news earlier on, about half an hour ago, which was regarding the Empire State Manufacturing Index for the US. Boy, they are not expecting this economy to be doing so well. And yes, ladies and gentlemen, it's coming nice and very nice for the United States. What does that mean? Well, it's a little bit of a problem because how are we going to get any rate cuts if the economy is not suffering from the high interest rates? And that's something that you've always got to have in the back of your mind when you do start considering taking positions in specific assets. Consider this. You've got the euro. Well, the euro's suffering a little bit because of what's going on with the French elections, with the dread that the right-wing guys are going to come into power. So people are like, oh my God, I cannot allow that to be the case right now. And then you've got what's going on in China. China ain't really doing too well right now. And with China not doing too well, that only means that oil isn't being picked up. And that means there's a slowdown in China. And as I've said before, China is the world's factory. And if those guys ain't doing any business, nowhere else is really going to be doing business. But the US looks like it's doing all good. Now, I've said this before. It's all designed for this election, because once the election comes into play, then we'll see truly where investors' heads are at. In today's live stream, we're going to be talking about why there's good news and bad news about Bitcoin, and this is in reference to the ETF itself. Yep, the ETF, that thing still is moving right now. And the ETF is, in essence, the passport for the individual investor to start getting involved in cryptocurrency. And according to sources, they're a little bit wary of getting involved in a Bitcoin ETF. Why wouldn't you want to buy Bitcoin? I mean, come on. Nothing's wrong with Bitcoin. It's to the moon, baby. If you are new to the channel, ladies and gentlemen, let's get with the program. Mad love and respect. Hit the like button, subscribe if you're liking the flavor so far. I hope I put a smile on all your faces. Let's get with the program. Here we go. So let's roll with it. Okay, then. So what we got? Well, this is the S&P. Significant highs. Remember, the S&P does not have a sell button function. In other words, if you are trying to short the S&P, just be mindful, because according to sources in the CME, the engineers are struggling to fix this sell button, and it just doesn't seem to be fixing. So the only button that works is buying. And of course, me saying that, the S&P will just take a slump to the downside. Which leads me over into something. There seems to be a little bit of a correlation between cryptocurrency and the stock market. When you see the stock market going up, Bitcoin, Ethereum tend to start moving down. Now, I'm saying this from the perspective of trading on depth of market per se. I'm noticing that when Bitcoin goes up and Ethereum goes up, the stock market's pulling back a little bit. So you could make the assumption that maybe the stock market is taking money from the stock market and then putting it into crypto. We would hope that would be the case. Now, with that being said, let's just get on to what's going on in cryptocurrency overall so we understand where we are. The market will be opening in the next 25 minutes, so stick around for this. Here we go. So, 5 things you need to know about Bitcoin this week. The 66K price is now critical. We said that last week. Now, don't get it twisted. If they break 66, we got a problem. And Bitcoin is now currently trading below the 66K range. This is an issue. However, something that we've got to take into consideration, which I'm going to talk about in a few seconds, is the liquidations. We've got quite a few liquidation points at the upside, suggesting that a lot of people are trying to run for shorts on Bitcoin right now. Now, the article goes on to talk about Bitcoin's stubborn nature at trading sideways. And going into this week, we've got a barrage of macro data that's coming out, which is going to have an impression on investors on their idea of what the Fed is planning on doing with the interest rate. So let's just go over to the calendar and have a look at what we need to be preparing for. Well, of course, the Empire State Manufacturing Index has just come out and it's a positive reading of 6. Now, if we just go over to where we are right now in the Empire State Manufacturing Index, just a little bit of a background on this. This effectively takes a leading indicator of economic health. Businesses react quickly to market conditions, and it just shows you the sentiment of where we can end up from a manufacturing perspective. And it surveys 200 manufacturers in the New York State area, and it asks the respondents to rate the relative level of general business conditions. So those business conditions are, what's the situation with hiring, investment, spending, economic activity, or for the future? What do they think it's going to be like? And if these guys come out with a positive sentiment, then that can only imply that companies in the manufacturing sector, whether it's to do with semiconductors, whether it's to do with transportation, whether it's to do with anything that requires a manufacturing process of a product, naturally, if they're feeling optimistic about things, then that can only mean that things are looking good in the near future. So we actually go and have a look at where we are with the Empire State Manufacturing Index. And this is all time. You can see that in 2020, of course, the COVID crisis, that is what had led to this wide spike down, spike back up. But if we just zoom in a little bit and have a look at where we are, you can see that we've got this negative trend in the manufacturing sector. But now all of a sudden, they haven't updated it just yet. It was a minus 15.6 reading before, and the readings just come in at minus 6. So we've had an increase in activity in the manufacturing index. So they are feeling a little bit optimistic about things. So with that being said, if that's going to be something that's happening, or they're suggesting that there is activity and things are looking good from a manufacturing situation, then we then say to ourselves, how is that going to affect the Fed? Well, this is the data that the Fed is waiting for. And the more positive data we get regarding the United States economy, the less likely the Fed is going to be inclined to try and cut the interest rates. That's the situation we've got right now. And one cut, is that going to be enough? No, not really. 2 and 3 is what investors are looking for, okay? They want the same behavior of when the Fed started to increase the interest rates to be the same behavior that they get when they get the cuts. And that's not what's going on right now. So then you then look at it and say to yourself, what else have we got going on this week? Well, look at what's happening. We've got this week coming out. We've got the UK going to be talking about whether they should be cutting interest rates or not. You've even got this over here, Vanguard, saying that the Fed's caution will hold back Canada on rate cuts. So cuts every other meeting are more reasonable, and the Canadian dollar has sagged versus the greenback this year. So everyone in principle is going to be waiting for what the Fed's going to do. The Eurozone has decided to cut the interest rates. All right. Now, something you've got to take into consideration. I spoke about this over the weekend. Emerging markets. Now, emerging markets are very important because whatever's going on in emerging markets, this is where investors are going to start seeking risk in new developed markets per se. So when we say emerging markets, we're talking about Brazil, we're talking about India, you're talking Mexico, all these other countries who are emerging as economies. Investors will naturally say, right, all right, listen, we've got all our money locked up in US bonds. What about the emerging market bonds? Well, investors now are like, okay, we're going to start pulling away from these emerging market bonds. We're going to stick to what we know and stay with the US, which tells us that if we just go over to the bonds market itself, just to have a look at where we are, you can see the 2-year yield right now is trying to make a little bit of a climb up, and you've got 0.62% increase for the day. And it is trading at the lows of 4.7%. Going into the 10-year yield itself, that's also trying to climb up. And naturally, when the yields are going up, this is going to have an impact on the stock market. Now, sometimes what you can see is when the stock market is trading at significant ranges or significant highs, the idea is that there's going to be some form of profit taking. Now, when you're trading the NASDAQ or the S&P, making reference to the bonds market is going to help you understand where the big money is going to end up. You can be naive and say, right, I'm only just working on Bitcoin. I'm just going to focus on Bitcoin. Well, looking at Bitcoin's price action right now on the 4-hour time frame, we are at a very important point because there could be the potential for a vector candle recovery point coming into play. But if we just consider where Bitcoin's been going lately, it has been dropping down, which is, I would be expecting a bit of a flush out at some point, which leads me over to the next thing. going over to Bitcoin on the high block, it's showing us that we've got lots of short liquidations at the 70,000 zone. So there's something sinister with the way Bitcoin's price action is behaving. Like I said to you last week, you want to be seeing, I think Bitcoin's just going to be doing this for quite some time. And we're probably going to have Bitcoin stuck in this range, maybe up until the actual election. There is the possibility of that happening. All this accumulation that's happening here, ladies and gentlemen, is going to lead to a significant move in one direction, which is going to be entrapping traders to believe that is it. And then everything will then reverse and it will just continue its descent to the upside, and happy days to anyone that's taking advantage of that in regards to the DCA story. Now, before we continue on with Bitcoin, to understand where money's going, back what I said about China. The industry expansion has lost momentum, and of course, that's a problem, because if China's slowing down, then the economy, the world's economy, is going to start struggling as well, because everything you buy is from China. And this is the problem that we've got. Now, even talking about the property story with China, the Evergrande, even the CEO is being done for fraud. And if they default on this, it's going to be a big problem for China, a massive problem, which is why they're going off to Australia to try and, make life a little bit easier with them. But this is very important. If China and Australia are going to start getting into bed to each other, and of course, China lifting up the tariffs on the sanctions, on Australia with regards to wine, this could be a good sign for us. Why? Well, if we just go back to the idea of Aussie yen, because we know that Aussie yen itself fundamentally is the principle of the carry trade. If you remember, when we're talking about they've used their dollars, okay, look at Aussie yen, they use dollars, and then they exchange those dollars into Aussie and use Aussie to go and buy stocks, commodities, Forex, you name it. Right now, the Aussie itself, Aussie yen, is effectively trading sideways. So it's effectively at a very important point in the ranges, which means that if it all goes well for Australia and China, and trade's going to start picking up, then logic would say there's going to be a demand for the Australian dollar. That would mean that they will be then getting their dollars and converting them into Australian dollars, and then they're going to start using those Australian dollars. And you can see that Aussie itself right now is trading at the 104, and we've got this violet vector candle region right here, which could suggest that we could end up seeing some upside momentum. But we've got to take into consideration where we are with the stock market overall. Now, the stock market right now ends on the week it ends on the positive week, but as I said, the volume on the stock market is very, very low across the board. If we just go have a look at the chart itself, and you can see on the NASDAQ composite, you can see over here, let me just pull that up for you, happy days. Look, its volume is very, very light. And if they are going to be making highs, they need to be making the highs on high volume. Very important to have a conviction that if assets are going to keep on appreciating, well, we need to see the buying power behind it. Now, down at the bottom right here, you can see there's not that much activity or any volume above average. The only volume that's above average is when they're selling. You can see this. Look at this. All these pink bars here. This is when they're selling. All right. Now, in order to sell, someone has to buy, which leads me over to the next story itself. Going over here, you can see. Whoa. Not that one. This one. Mass adoption would ruin crypto. I don't understand this. Mass adoption would ruin crypto. Well, the problem that we have got is if we go over to this, advisors weary of Bitcoin ETFs are on a slow adoption journey. So hold on a sec. Mass adoption would ruin crypto, but at the same token, the ETF has been designed to get people involved in the game of crypto. Now, when you go into the article, you look at this and think, oh my God, weary of Bitcoin ETFs are on the slow adoption journey. And that's coming from BlackRock, which would explain why BlackRock hasn't really been picking up much ETFs going into it. Or you can see the latest purchases have been, there have been a lot of sells yet again. Grayscale, we've got Bitwise selling as well. ARK Investment, they've been selling, had a little purchase from Invesco, but then goes to this article over here that the 200 million outflows on the Bitcoin ETF are suggesting that investors are probably not wanting to get involved in the Bitcoin ETF. But when you go back into this article here, it says that Financial advisors' concerns around Bitcoin include the cryptocurrency volatile prices. So people aren't used to the volatility of Bitcoin. Now, when you go down into the article, it does say that hedge fund managers, says here, Cohen, BlackRock's chief investment officer at Index Investments, noted that hedge funds and brokerages have also been buyers based on the last quarters of the 13F filings. But registered investment advisors have been a little more wary. So there's one or two things that's coming into play here. People are not interested in the Bitcoin ETF, or investment advisors just don't understand Bitcoin. Hedge fund players, they're getting involved in the Bitcoin. But you've got to understand, hedge fund managers, they're going to be in the cryptocurrency, or they're going to be in the ETF as a hedge fund manager. Their job is to hedge themselves. So whatever risk they're trying to offset, they could turn to Bitcoin. Because when you look at Bitcoin, go back into Bitcoin's price. With all the madness that's been going off in the stock market, I would say on a daily time frame, Bitcoin has been doing fantastic. It's been doing great when you think about it. This is where hedging comes into play. They find an asset that's not really doing that, wild movements. And look, Bitcoin can come back down into this green vector candle zone. That still will be fine because Bitcoin right now has stuck in this 74,000 zone here. And then you've got this 56,000 zone. All right. So you've got yourself pretty much just shy of around, near enough an $18,000 range. Okay. But that is good for hedge fund managers. Why? Because they have effectively an area where they can offset their risk. And that's why Bitcoin, in my opinion, is bouncing up and down, up and down. I mean, we can go over to other things like what's going on with crypto in terms of Bitcoin on the on-chain analytics. You see Coinbase Premium Index, that's coming in lower right here. Okay, happy days, that's going down, which suggests that people are not buying on Coinbase, but we understand that in order for price to go up, they have to buy it. So we go back into the order flow right here on Bitcoin, you can see that we're coming into an area, significant area of bids where historically there's been interest in Bitcoin. You can see over here, we got 19 million is yet to be filled on Bitcoin at the 65,300 zone. So this area right now is either going to trigger Bitcoin to go up from it, or it's just going to completely collapse to the downside and finalize the vector candle regions down at these lows right here. So it's very important for Bitcoin's price right now to actually do something. And when we back it all up and go to the high block, you can say, okay, there are a lot of people going short right now. Lots of people are borrowing money on exchanges. Going to the put-call ratio over here, you can see that we've got options coming in suggesting that the options ratio is starting to climb up. Then we go over to the market watch over here, and you can see there's lots of puts being opened on Bitcoin. Lots and lots of puts. That means that people are thinking Bitcoin's price is going to go down. And of course, like good old nature of the stock market and in cryptocurrency and in the Forex markets, when we think one thing is happening, the opposite is going to end up playing out. All right. And it's very important that we pay attention to these premiums here, because if we look historically, every time you see a peak in one of the two out of the call premiums or the put premiums, it ends up doing the opposite thing. Okay. Now, what do I mean by that? Well, you've got to understand that when you've got a put, it means you favor lower prices. So just look at it from this perspective over here. If I've got puts, I'm expecting lower prices. So all my puts are all the way up here. All right. Then what happens? Price ends up going up, shakes out all those guys in the puts. They're out of the money now. And then it comes back down again to get the same guys who were originally in puts to change their narrative and go to calls. Bitcoin breaks out, happy days, we go long, and then of course it rips it back down again. This is the story right now, in my opinion, on what's going on with cryptocurrency. So to summarize it, we've got advisors not really looking at advising the idea of getting involved in the Bitcoin ETF. I mean, look, you've got Bitcoin's price, and then you've got the price of the ETF. Go over to the ETF itself, and you can see bright as day, there's nothing really happening over there. You know, you've got this nice little M formation right here. We've got a few gaps in play. Got a big gap right there that they could be looking at finalizing. You've got the stock market itself trailing at the all-time highs, not really going anywhere. NASDAQ just doing its own thing, stuck up there. We've got the dollar dominance itself looking like it wants to try and come back down a little bit, which is good news for us. And of course, if China and the oil game starts to be a bit of a problem, oil is likely going to keep on marking up. We're expecting oil to make a little bit of a movement up, because the activity of what's going on in the stock market is going to have an impact. Investors are going to start turning to commodities. Why? Because the idea of the data coming out is suggesting that rate cuts might not be on the cards. Now, all we need is core retail sales to come in through the roof. If retail sales come in higher, then that only means that if the manufacturing index is going to be improving, that means retail sales coming in higher means that people are spending their money. That only leads to one thing. Manufacturers are going to end up saying, you know what, let's increase the cost of doing business. That cost itself is going to get pushed onto the consumer. The consumer is going to be absorbing that. Happy days, ladies and gentlemen. You've got inflation back to the business and going up. That's the problem that we have got collectively, all right? We're all waiting for this data. And until all of the major economies like the pound and the euro and Canada and Australia, when they declare what they're doing with their with their interest rates, that's when you're going to start seeing the next narrative of movement across the board. Because right now, it's a little bit tricky, all right? We know the Fed is just waiting for data. That boring story upsets me. I mean, if we just go over to XRP just for a split second, we've had some good news regarding XRP. I mean, where was it? Here we go. SEC Ripple's argument for a lower penalty. They only want to pay 10 million. But the SEC wants 876 million. I mean, what? You can't tell me that the SEC is not in the game of heists. This is a money heist. Ripple is agreeing to none of this relief. In fact, Ripple is agreeing to nothing. Ripple's arguing that Terraform's 420 million civil penalty was around 1.2% of its 33 billion gross sales, wasn't apples to apples comparison. So look, it's SEC still gunning for XRP, which makes me want to hold it even more, ladies and gentlemen. All right, I'm holding my XRP, and you know what's really messed up? All right. Yesterday, I had an old tablet. Let me just tell you this, and we'll get into a little bit of price action with Bitcoin. Yesterday, I had a tablet. I found a tablet in my car, and I was like, right, okay, I need to get this charged up, right? So I charged it all up, and I gave it to my butler, my brother-in-law, sorry, and he was like checking it out. Anyway, when we opened the tablet up, it showed me the widget of trading views, an Android, right? Showed me the widget of trading view. At the time, Bitcoin, okay, was $30,000. Ethereum was down at the 1,600 mark. XRP was at 50 cents, man. It's the same price. I couldn't believe it, man. I can't believe it. And now look at where we are. This thing is still at 50 cents. It's frustrating, but you gotta love the stable coin market, ladies and gentlemen, because that's exactly where we are right now with XRP. So, to put it into perspective, cryptocurrency startups, they eclipsed to 100 billion. So activity is happening in crypto. That's good news. Happy days. SEC wants to shut down Ripple. No problem. Nothing that they can't handle. Vanguard says you got to hold caution back with regards to the rate cuts. So we know that people are waiting for the Federal Reserve because of the data that's coming out this week regarding manufacturing indices across the board. So we know where we stand with that. Of course, mass adoption of crypto would ruin crypto. No, it wouldn't. Nah, not in my opinion. Advisors are weary of Bitcoin, so things are a little bit okay. In financial advisors are not telling their mum and dad investors that you should be getting involved in Bitcoin, but hedge fund managers are picking it all up. So in other words, let's just pick up the supply and then get the investment advisors to advise people to pay Bitcoin premiums. In other words, wait till it gets bloody expensive and then we'll sell it into you all. What a great business model, in my opinion. So with that being said, ladies and gentlemen, let's get into the charts right now just before the market opens. And let's just have a look at what we can expect from BTC. Right, Bitcoin on the daily is looking a little bit troublesome. Let's just have a look at where we are collectively across the board with some data. Right, what we got in front of you. I've got this Exo charts, and there's a platform within Exo charts that you can use. I can't even say it properly. Levitus, whatever it is. Okay, just gives you a little bit of information. You get this information everywhere on what's going on in terms of volume, on open interest, and it just tells you exactly what's going on. So right now you can see open interest on perpetuals. We've got a drop of 1.63%, and futures is up 0.47%. Options markets are up also at 0.15%. Total being open interest is down by 0.77%. So not that much money. I mean, 95 billion across the board, but not that much money is being taken from exchanges. Remember, when you're buying on leverage or selling on leverage, you're effectively borrowing money from an exchange. Now, some key levels that you want to be paying close attention to. What we've got right now, in the last 24 hours, we've got lots of volume coming in right now. And if prices are going down by the principle of buying and selling on the bid and the ask, we understand that investors are actually running shorts right now, which would then make sense as to why the volume is going up across the board on perpetuals, futures, and options. So people are thinking maybe it's now time for Bitcoin's price to go down. We then take that logic and we just say, hold on a second, are we looking at that? Yes, we are. You can see shorts volume right here is going quite significantly. And then you've got this little area down here around 65,000, which could end up becoming a sweep zone. So we've got to take that into consideration. But we've got lots and lots of short liquidations that could be eaten alive. Going back into the bid and the offers, sorry, not the bid and the offers, going over here to the liquidation chart, you can see lots and lots of shorts are coming in. And we are effectively, not many people are suggesting longs right now. So they could be closing their longs right here and end up going shorts. And this is what you got to look for. You've got to look for the relationship for when there seems to be a shift in people's opinion about what Bitcoin could be doing next, especially when you're leverage trading. Remember, leverage trading is about borrowing money from an exchange and putting it to work. In other words, do you think Bitcoin's price is going to go up or down? And as long as we've got a collective of people that believe that, then the market naturally is going to say, hold on a second, we've got millions and millions of dollars worth of money being borrowed on exchanges. As a market maker, I'm providing that liquidity so that when you go long, I go short. And your margin is where his pocket money is. And his pocket money is going to be taken at some point. Put that into perspective, go to the high block and then have a look at other areas like the liquidation levels. And then say to yourself, okay, then what have I got? Where can I identify that that's the case? Look at this nice blue sea of shorts. Right now, Bitcoin came down here. They ate the liquidation points for the longs. So all the longs are like, oh my days, man, I can't stand this movement with Bitcoin. I think Bitcoin's going to go down. So the same guys that can't handle the price of Bitcoin going lower then think, you know what? I'm going to go short on Bitcoin. Now we're starting to see lots and lots of shorts being opened up. We do have this liquidity down here, but you can clearly see that there is a deviation from the median of liquidations. That means there are more short liquidations than there are long liquidations. There will be an event that would lead you to believe that now is the time to get in on a short on Bitcoin, because that's how the market operates. It's solidifying commitment, because they need to move price to an area of liquidity to make the guys who were there previously believe, oh my God, it's getting ready to go down, and then they will make the reversal. That's why it can be a bit frustrating for people who are breakout traders. They'll look at Bitcoin and say, okay, where we got Bitcoin right now in a range? They might draw this area here and say, here we go, we've got a zone right here, and we've effectively got a zone up here. If Bitcoin breaks higher towards that point, happy days. If Bitcoin goes down to that point, happy days. Now, if you look, Bitcoin has been successfully taking out these areas where interest is coming in. And each time it goes to it, there seems to be an aggressive bounce. Now, what I'm suggesting to you is not get ready to start loading up on your Bitcoin because everything's going to keep on going up. Short term, there could be a little bit of a volatile move because we've already had the move away from the psychological ranges, both high and the low of it. And this area here for Bitcoin is very critical. We're going to assume that this is the move that has suggested Bitcoin to try and make a reversal from this point. And this is what you've got to do with your risk. You've got to say to yourself, does my risk factor in the idea of that potential coming into play? Because if it doesn't, you're going to get smacked. And I'm talking Will Smith smacked across the face. When you're looking at your leverage, like, oh my God, I've been liquidated. And then it goes in the direction that you wanted it to go in the first place. All right? Looking at Bitcoin from Exo charts, just to have a look at where we are in the profile, you can see that over here on the left, I've got this, right? Let me just get rid of this here to make it easily, so you guys can see it much easier for you. Here we go. No? Is that it? That'll get rid of it, won't it? There we go. Happy days. All right, cool. So this is the daily profile of Bitcoin in terms of order flow. And what you can see right now is the point of control is at 2,643. That's 66,318. All right? Now, as a holder, you might turn around and say to yourself, where would be an ideal time to be buying Bitcoin? Well, what you've got to say to yourself is this. Don't buy Bitcoin when you're seeing Bitcoin performing above the highs of the range's profile. You don't want to be doing that because you're going to end up getting shaken out, all right? So you always want to be looking for Bitcoin when it's trading at the lows. Right now, Bitcoin is currently at the lows of the profile for the day's range. And we've already got a value area low. And if you look carefully, it says 2,273 here at 65,693. Now, this is important. Why? Because the point of control is at 2,643. So one would be of the assumption that if they keep on transacting in this range, the point of control is going to change, which means that value has gone down lower. The point of control is lower, which could mean that this area could be a point of support. But then you need to monitor it to see that if it is an area of support or it's an area of resistance, because if it can't keep going up, then there could be a problem in this area. So they then naturally will navigate price lower. So you can see we're at the lows of the profile. There's not that many contracts right here. Up here is where the contracts are. And this blue area is where value sits. And wherever the value is, the market will naturally magnetize towards it. It will start thinking, well, we can transact in this area or this area or this area. They will move to those points. The best way for me to explain this to you is see the value area low, which is the gray area. The blue area is the value area. And the value area high is the top area here. See it as if you were in a nightclub, okay? Everyone's in the middle on the dance floor, okay? Then you've got the guys over here, all right, who are on the right side of the nightclub where it's like, the drinks over there ain't too nice. They're really, really cheap. No one's really buying those drinks, okay? Naturally, you're going to go and start getting a better drink. So then you'd think you're going to go to the next point of the nightclub, which is all the way up here, where the drinks are a little bit more expensive. Well, you ain't going to be buying expensive drinks all night. You're going to end up coming back into the dance floor and start licking someone's forehead because of the sweat that's coming off them. It doubles up as a little bit of water, maybe a little bit of salty water, but you get the idea. That was a bad example. No way. I've never done that. Never. That is rough, man. But that's the idea of the best way, in my opinion, to really try and navigate what the concept of value is going on in the chart of Bitcoin. If you are a depth of market trader per se in this area. Stop laughing. Stop laughing. That was wrong. That was wrong, ladies and gentlemen. No, I should not have said that. All right, and let's just have a look at what's going on across the board. Right, so we've got S&P and NASDAQ taking a little bit of a shoe back to the downside. Euro is taking a nice little climb to the upside right there. That's good news for us. Cryptocurrency is going to be pulling a very interesting move, ladies and gentlemen. Just be very, very mindful of that. And someone asked a question earlier on talking about it. Where can you trade crypto and stocks? So we're with an exchange called BTCC. They've been around for 12 years. The link is in the description of this live and this video. So go check out BTCC. But more importantly, if you've got any questions about BTCC, get into our Discord. Because in the Discord, there is an AMA in there. And Eric, who's answering everyone's questions about BTCC, is in there answering them. It's great for anyone that's in the United States that doesn't want to do KYC. You can just effectively deposit with crypto and you don't need KYC. If you start using fiat, you are going to need KYC because it's a regulated exchange. It's got all the regulations and they've been around for quite some time and they do have no issue with volume. You can see 38 billion and no one knows about them. And they've been around for 12 years. So happy days. And of course, MEXC is around the corner towards its KYC. Just remember, take that into consideration. They're going full KYC. So for those of you that want to take advantage of that, go check that out in the description of this video and live. With that being said, we are at the open of the marketplace, ladies and gentlemen, okay? And as I've said to you, just make sure right now, psychologically, you've got to say to yourself, what's going on? What are people thinking about the marketplace? What's on their head? Is now a time to sell? Is now a time to buy? Wait for the initial reaction. Let the market react, and then you'll have a good opportunity to take advantage of certain plays in the chart. Okay? Now, with that being said, ladies and gentlemen, yes, it was the wrong analogy. With that being said, he knows the taste. I don't know the taste, man. I've just walked up in the nightclub and people have walked past me. I got squashed up with my drink. That's why I won't go raving anymore, because everyone's all sweaty in those places and they're knocking my drink over. It frustrates me. Listen, if you are new to the channel, you've enjoyed today's live, be sure to like and subscribe, and I will be checking in with you all later on this evening on the market close. All right? So take care of yourselves, gang. Mad love and respect. Trade safely. Peace. I ain't ever talking like that again.